Property Management Chart of Accounts, free sample template. In this video, I will break down a complete guide to crafting a property management chart of accounts. Never created a chart of accounts? I'll take you through it step by step. Created one, but never for property management rentals? I'll offer specific tips and examples, including a sample chart of accounts for a property management company. Looking for something specific? Use the chapters to jump to the information you need quickly. Or you can take the shortcuts. Click the link in the description for either of these. Download our free chart of accounts template. I still recommend watching this video to understand how to use it. Schedule a free demo with DoorLoop to experience our full suite of property accounting tools, including a full chart of accounts, automatic rent collection, bank account reconciliation, robust reporting, and more. With that said, let's start from the beginning. What exactly is a chart of accounts, and why is having one important? What is a property management chart of accounts? A chart of accounts is a list of all the different financial accounts related to your property business, whether you're a property management company or investor, landlord. This includes every type of financial account, including tracking expenses, revenue, insurance, transactions of any kind, bills such as utilities, credits, etc. The best way to think of a chart of accounts is as a digital filing cabinet. Imagine every financial action your business takes, or that affects your business, as a document, and each of these documents fits neatly into a particular folder. Now you've got the idea. Your chart of accounts isn't just important for filing away financial information though. It's the database you'll pull from to craft important reports like your balance sheet, which helps you access your business health, forecast its future performance, and provide information to your banker and accountant. Your chart of accounts serves as a part of the foundation of a sound business structure, so it's worth investing the time or professional help in crafting one which does the job you need it to do. How does a chart of accounts work? So then, how does it work? It can get complex, but when you break it down into steps, a chart of accounts for property management is pretty straightforward. A chart of accounts organizes 5 major types of financial information. Assets, this includes the properties most notably, and financial accounts. Liabilities, primarily debt such as mortgages on those properties. Equity, money you've invested in the business. Revenues, the money the business brings in from things such as rent, parking, and other tenant fees, etc. Expenses, the money the business spends to manage itself, such as repair costs. From there, you then break those primary accounts into sub-accounts. I'll go over some specific examples next. Once you have that in place, every transaction that passes in or out of the business is recorded on that chart of accounts, be it a property sale, rent payments, or service costs. That not only makes everything way more transparent for you or your clients, but easier for you to manage financial activity in virtually every way. How to set up your property management chart of accounts. There is no standard structure for a chart of accounts, including one for managing property, be it rental property or other. There are, however, suggested structures that you can use as a kind of template. If you're managing a rental property, a good place to start for a suggested chart of accounts is IRS Schedule E, Form 1040. Since you likely file that already, you'll be familiar enough with it to understand how your chart of accounts break down into those major categories. Our template uses this form as a basis to make it as easy as possible to craft your chart of accounts. This isn't just a rental property chart of accounts though. You can use it for any kind of property management. What about using a Quickbooks chart of accounts template? Keep in mind that Quickbooks does not have a generic chart of accounts template you can use. However, because they're not designed specifically for property management, they typically need more modifications than the work you'd need to just make your own with the property management specific template. So it's not generally advisable to use one of Quickbooks templates. Next, I'll take you step by step through crafting a chart of accounts designed for managing a property. Let's start with step number 1, establishing your number system. Number 1, decide on your overarching number system. The first step in setting up a chart of accounts is deciding on your number system. Typically, that's done with something called block numbering. That simply refers to a practice of blocking out or reserving large sequences of numbers for future use in accounting. The basic idea is that a business grows. Its number of accounts tends to grow in tandem. Right now, you might have 20 asset-related accounts, but over time, that number will grow to 30, 40, etc. If you select numbers 1 through 20 as your asset accounts and 21 through 40 as your liability accounts, 41 through 60 equity, 61 through 80 revenue, and 81 through 100 expenses, what happens when you get your first 21st asset? It would have to become account number 101, which would just be downright confusing. Instead, do it like this using blocks of 1,000. That way, you made more than enough space for new accounts. Doing it this way doesn't just keep your chart of accounts from becoming a jumbled mess, it also helps make identifying accounts easier. With the number blocking, you and your CPAs can easily identify what type of account it is by its first digit. If it starts with a 2, you know it's a liability. If it starts with a 4, you know it's a revenue account. Number 2, set up your level 2 accounts. Now that you have the basic architecture done, it's time to drop in all of your level 2 accounts. What kind of information fits into each of these 5 overarching categories? Here's a quick breakdown of what kind of accounts are included in each. A. Revenue accounts. If you manage your own rental property, this typically comes down to one main account: rent payments. However, it also includes any other source of revenues such as utility payments, security deposits, parking fees, pet rents, etc. B. Expense accounts. Your expense accounts are relatively easy to set up as they'll most likely be similar or identical to the 15 expense accounts listed on Form 1040. That includes advertising, auto and travel, cleaning and maintenance, commissions, insurance, legal and other professional fees, management fees, mortgage interest paid to banks, etc. Other interest, repairs, supplies, taxes, utilities, depreciation expense or depletion. You can also include an other expenses category for things that just don't fit anywhere else. However, that can get tricky come tax time as they'll need to be identified somehow for both your accountant and the IRS. C. Asset accounts. Most notably, you'll include a line for each business bank account here. Mortgage escrow accounts, land buildings, and improvements are typically included here as well. Accumulated depreciation is another common account, and it's designed to track the depreciation of your assets over time, specifically the original value of these assets, the accumulated depreciation, and the net asset value via the balance sheet. D. Equity accounts. Equity accounts essentially include 2 things: your contributions and distributions, or in other words, what you put into the business and what you take out. Expenses paid with cash are also included here as they count as an owner contribution. E. Liability accounts. Liability accounts include several types of accounts including mortgages, loans, line of credit, credit cards, and security deposits. Number 3, put it all together. Property management chart of accounts example. Now that we've gone through the basics, it's time to put it all together to see what our chart of accounts looks like. Next, I've taken our 5 major categories, the 1000s for the assets, etc., and added many sub-accounts based on what we talked about in step 1. The result is a fairly fleshed out chart of accounts example template for property management. Wow, complex but easy to read and chart where each account fits. Keep in mind, you could use this as the basis for any kind of real estate business, including as a rental property chart of accounts template. Okay, let's finish with the question you've likely already been asking yourself. How do I track multiple properties in your chart of accounts? Let DoorLoop help you streamline your property accounting. Getting an accounting system set up that works for you can take a while, so it's understandable that once you find something that works, you don't want to switch. The problem with this is, if you're tracking your accounting on a notepad or even spreadsheets, it takes way too much manual input. You're trading time, easily hours each week, that you could otherwise use to do something else more productive or simply have more time to spend with your family. DoorLoop gives you that and more, with tools like automatic rent collection, leasing tools, and even a full maintenance management system that gives you the ability to set up workflows that make preventative maintenance easier and reduces unexpected and costly repairs. The best part is you can see what DoorLoop can do for you without paying a dime. Schedule a free demo today to see how DoorLoop allows you to streamline your property accounting and much, much more. Click the link in the description. How do you track multiple properties? Taking the template example I've mentioned, your dwelling account is 1,400. So to track multiple properties in your chart of accounts, you'd organize things like this. So we know that anything starting with 1, anything in the thousands is an asset. We also know anything in the 1400s or starting with 14 is a property dwelling. Now we've also identified individual properties with their own third-degree identifier. So the properties in the example are given the numbers 1401, 1402, 1403, 1404. With that, you have the 101 on crafting a property management chart of accounts. A note on owner versus property manager versus landlord. One last quick note, how you craft your chart of accounts will vary somewhat depending on if you're the owner investor themselves, the landlord, or the property manager. For example, if you're the property manager, then the rent payment you receive should be listed under liabilities, just the same way as you'd list security deposits and liabilities. You'd also want to separate revenue accounts for payments to you for your service. Keep those subtle perspective details in mind when crafting your chart of accounts. Download our free property management chart of accounts template in Excel format, so you can apply everything you learned from this guide or see if you forgot anything in your current setup. Manage your properties and your accounts with clarity. Creating a chart of accounts, whether you're managing a few dozen properties or a few hundred, is a key to organizing your accounts effectively. With a good chart of accounts in place, you can run important reports you depend on with accuracy and empower you or your client's property management with the most important kind of data, financial data. It takes a bit of time to set up, but once you have the system up and running, you can easily pass it off to a CPA to manage, whether now or down the road. Use the tips, steps, and examples I talked about in this video to make the process of setting up your own chart of accounts simple and easy. Thank you for watching this video. Please like, comment, and subscribe for more property management content. Also, check these videos out. Thank you, and have a great day.